The chart of the week is presented by Glassnode, the leading on-chain intelligence platform.
Welcome to the first edition this year of Chart of the Week, where today we're delving into the sophisticated indicator that is value days destroyed. This is a variant of the well-known coin days destroyed metric, which offers a deeper insight into the spending patterns and current sentiment of Bitcoin's most sophisticated investors. Coin days destroyed is a measure that gives more weight to coins untouched for a long time, and this highlights the spending behavior of long-term investors. It's calculated by multiplying the number of coins in a transaction by the days since they were last spent. So higher values may indicate that long-term holders of Bitcoin are realizing profits, while these lower values are suggesting that older coins are staying dormant more often than not in anticipation of higher prices. So the value days destroyed multiple extends this concept, comparing recent spending to the yearly average, and this helps us detect overheated or undervalued markets. And it's particularly effective in identifying market tops, which are marked by the spending of older coins, which we can see here, as well as these periods which are characterized more so by dormancy and accumulation. Currently, the value days destroyed multiple stands at around 2.34, which, as you can see from the metrics history, it's not quite up here at these extremes, but is still of a mid to high value. Right now, we're of course still coming off the back of the ETF approval, and we saw quite a modest spike here surrounding the news, signaling that many investors, including long-term holders, treated this as a sell the news event. That being said, if we look back to the euphoria phase of the 2021 bull run, we can see that Bitcoin's trading price is at similar levels to where we sit today, and the current value days destroyed multiple is only at about half of its levels back then. And this suggests that the majority of long-term investors, the so-called hodlers, are still out there holding out for higher prices. So for traders and investors, this indicates that despite the recent sell-off, we are experiencing a consolidation phase rather than a strong reversal of the overall upward trend. And while some volatility might lie ahead, the most experienced and high conviction investors seem to believe that the overall uptrend will continue. So I hope that shows how the value days destroyed multiple can provide key insights into the behavior of these long-term holders, and also how it allows market participants to align their strategies with these experienced investors. And that, folks, wraps up our analysis for today's chart. But just before we sign off, we're excited to mention Glassnode's recent collaboration with Coinbase. Together with Coinbase, we've crafted a comprehensive report that delves into crucial price and blockchain data. And the idea behind this report is that it's tailored to serve as a strategic roadmap for institutional investors, offering in-depth insights into the cryptocurrency markets with a special emphasis on Bitcoin and Ethereum. And as we're entering the next phase of institutionalization of these assets, this report is an invaluable resource for navigating the market. You can find the report available for download in the description below if you want to give it a read. Thank you for joining us. It's great to be back. We'll be here with more insights in our next chart of the week from Glassnode.